Breaking news for every senior in America receiving Social Security, SSI, or SSDI. The IRS has issued a serious warning that is already affecting thousands of retirees and disabled Americans across the country. And if you or someone you love receives federal benefits, you need to hear this right now before it is too late. Here is what is happening. The IRS is flagging bank accounts. Specifically, they are watching for cash deposits of $10,000 or more. And what most seniors do not realize, what nobody is telling you clearly, is that making one of these deposits, or even a series of smaller deposits that add up to that amount, could trigger a federal review that puts your Social Security, SSI, or SSDI benefits at serious risk. That is not a rumor. That is not fear-mongering. That is federal law. And in 2026, enforcement is tightening. If you received a lump sum payment, sold property, got money from a family member, received a legal settlement, or even saved up cash over several months and deposited it all at once, the IRS and the Social Security Administration may already be looking at your account. This video is going to explain exactly what this warning means, who it affects, what could happen to your monthly payments, and most importantly, what you need to do right now to protect yourself. Stay with me. Every single word of this video matters. Welcome. If this is your first time here, this channel exists for one reason and one reason only: to protect you. We are here for the seniors. We are here for the disabled Americans navigating the SSI and SSDI system. We are here for the caregivers and the family members trying to help their loved ones hold on to the benefits they worked for and depend on every single month. We do not use complicated government language. We do not talk over your head. We break things down in plain English so that you can understand exactly what is happening with your money, your benefits, and your future before something goes wrong. Because here is the truth. Most people only find out about these rules after they have already made a mistake, after the letter shows up in the mailbox, after the payment stops, after the damage is done, and by then, it is so much harder to fix. That is why we are here, to make sure you are ahead of it, not behind it. So if you want to stay informed, stay protected, and never be caught off guard by a rule change or a government warning that could cost you your monthly income, go ahead and hit that subscribe button right now. Turn on your notifications, because we release important updates like this one regularly, and you cannot afford to miss them. Now, let us get into this IRS warning. Let us talk about what is really going on, why it matters so deeply for Social Security and SSI recipients in 2026, and what you need to do. Let us start at the very beginning, because there is a lot of confusion about this topic, and confusion is dangerous when your benefits are on the line. The IRS warning relates to something called the Bank Secrecy Act. Now, do not let that name intimidate you. This is a federal law that has been in place since 1970, but in 2026, the government's ability to monitor and act on this law has become significantly stronger. Here is what the Bank Secrecy Act requires. It requires every bank, every credit union, and every financial institution in the United States to automatically report any cash deposit of $10,000 or more directly to the federal government. This report is called a Currency Transaction Report, or CTR. Your bank does not need your permission to file this report. They do not need to notify you. They just do it automatically every single time. And here is where seniors get into serious trouble without even knowing it. Many people think, well, I will just deposit smaller amounts to avoid that $10,000 threshold. Maybe I will put in $4,000 one week, and then $3,000 the next week, and then $3,000 the week after that. That way it never hits $10,000 at once, right? Wrong. That is actually illegal. That practice has a name. It is called structuring. And structuring, intentionally breaking up deposits to stay under the $10,000 reporting limit, is a federal crime under the same Bank Secrecy Act. The IRS and the Financial Crimes Enforcement Network, known as FinCEN, are specifically trained to detect these patterns. So whether you deposit $10,000 all at once or whether you break it up into smaller pieces over a few weeks, the federal government may flag your account either way. Now, let us be very clear about something. Making a large deposit is not automatically a crime. Most people who deposit $10,000 or more are doing absolutely nothing wrong. The report gets filed, it goes into a database, and for most people, nothing ever comes of it. But, and this is the critical part for benefit recipients, when that report gets filed, it can trigger a review by the Social Security Administration, and that review can change everything. This is where we need to pay very close attention because the rules are different depending on which program you receive. Let us talk about SSI first, Supplemental Security Income. SSI is a needs-based program. That means the government gives you SSI because your income and your resources are below a certain level. As of 2026, SSI recipients are only allowed to have $2,000 in countable resources if they are single, or $3,000 if they are married. That includes cash, money in bank accounts, and certain other assets. Now think about what happens if you suddenly deposit $10,000 into your bank account. That deposit does not disappear. The Social Security Administration has the ability to see your financial records. They periodically review recipient accounts to check for changes in income and resources. And if they discover that you have $10,000 sitting in your bank account, even temporarily, they may determine that you are no longer eligible for SSI. They may stop your payments immediately. They may require you to pay back benefits you already received. They may send you an overpayment notice demanding thousands of dollars back. For someone living on a fixed income, that is devastating. That is the difference between keeping the lights on and losing everything. Now let us talk about SSDI, Social Security Disability Insurance. SSDI is not needs-based the same way SSI is. SSDI is based on your work history and the disability taxes you paid into the system during your working years. Because of that, SSDI does not have the same strict asset limits as SSI. However, SSDI recipients are not out of the woods either. Here is why. A large deposit can raise questions about your income. If the Social Security Administration sees a $10,000 deposit and cannot immediately identify where it came from, they may open a review to determine whether you have been working and earning money without reporting it. That is called substantial gainful activity, or SGA. If they determine you have been engaging in SGA without reporting it, they can terminate your SSDI benefits and demand repayment. And for seniors receiving standard Social Security retirement benefits, meaning you earned your benefits through your work record and you are now retired, a large deposit can still cause problems if it changes your tax filing status or if it comes from a source that was supposed to be reported. In 2026, with enhanced IRS data sharing agreements with the SSA, the ability of the government to cross-reference your banking activity with your benefit status has never been stronger. Let us talk about real-life scenarios, because this is not just about hypothetical situations. These are things happening to real people right now. Scenario number 1, the inheritance. Margaret is 73 years old. She receives SSI each month. Her mother passed away and left her $15,000 in a savings account. Margaret deposits the money into her own checking account because she is not sure what to do with it yet. She wants to use some of it for medical bills and some to help her grandchildren. Within weeks, the Social Security Administration flags her account during a routine review. They see the $15,000 deposit. They determine she is over the SSI resource limit. Her payments are suspended. She receives a letter telling her she owes the SSA back pay for the months she was over the limit. Margaret did not know this would happen. She was not trying to cheat anyone. She simply did not know the rules. Scenario number 2, the home sale. Robert is 68 and receives SSDI. He sells a piece of land that has been in his family for years. He receives $35,000 from the sale. He deposits it into his bank account. The bank files a currency transaction report. The IRS flags it. The SSA opens a review. Robert has to spend months proving the source of the money and showing that it does not affect his eligibility. The process is stressful, confusing, and costs him time and money in legal fees. Scenario number 3, the family gift. Linda's son gives her $12,000 to help her pay off her medical debt and make repairs to her home. He means well, he loves his mother, he saves up the money and gives it to her. Linda deposits it into her account because she needs access to it. Suddenly, she is over the SSI resource limit. She loses her benefits temporarily. She had no idea that a gift from her own child could trigger this. These are not extreme or unusual situations. These are things that happen every single day to seniors and disabled Americans across this country. And in most cases, the person receiving the money had no idea it could affect their benefits. Now let us talk specifically about what is changing in 2026, because this is not just about old rules that have always existed. There are new enforcement actions and policy updates that are making this more urgent than ever before. The IRS in 2026 has expanded its financial monitoring programs. Following years of discussions about the tax gap, meaning the difference between taxes owed and taxes actually collected, the federal government has made it a priority to increase visibility into large financial transactions. This means more currency transaction reports are being reviewed by human agents, not just filed automatically and forgotten. The Social Security Administration has increased its continuing disability reviews and SSI redeterminations in 2026. These are the reviews where the SSA checks in on recipients to make sure they still qualify for their benefits. Budget pressures and fraud prevention efforts have led to more of these reviews being triggered by financial activity, including large bank deposits. Data sharing between federal agencies has been significantly enhanced. The IRS, the SSA, and the Department of Treasury are communicating more effectively than ever before. Information that used to take months to transfer between agencies can now be shared rapidly. That means a deposit flagged by a bank can lead to a benefits review much faster than it would have in previous years. There is an increased focus on what the government calls improper payments. This is a priority at the federal level in 2026, and benefit programs like SSI and SSDI are among the primary targets for improper payment reduction efforts. That means anyone whose finances look unusual, including those with large deposits, is more likely to receive scrutiny. Taken together, these changes create a 2026 environment where the risk to seniors and benefit recipients from large deposits has never been higher. Now let us clear up some important distinctions, because not all large deposits carry the same risk. Deposits that are more likely to trigger reviews include cash deposits of $10,000 or more made at a bank branch, multiple cash deposits over a short period of time that together add up to $10,000 or more, deposits from unknown or unverified sources that cannot be easily explained, deposits that are inconsistent with your normal banking activity and income level, deposits that are less likely to cause problems but still need to be documented, direct deposits from federal, state, or local government programs. These are already known to the SSA and IRS. Tax refunds that are directly deposited. These are already in the government system. Regular documented income transfers that are consistent with your reported income. The types of money that create the most confusion and risk: inheritance money, legal settlements, gifts from family members, sale of property or personal assets, lottery or gambling winnings, money from a lawsuit, cash that was saved at home and then deposited all at once. All of these can look suspicious to an automated system even when there is a perfectly legal and innocent explanation. The problem is that the burden is often on you to prove that the money is legitimate. And doing that takes time, paperwork, and often professional help. This is the most important part of today's video. Everything you have heard up to this point explains the problem. Now let us talk about what you can do to protect yourself. Never deposit large amounts of cash without a plan. Before you deposit any significant amount of money, particularly anything approaching $5,000 or more, stop and think. Ask yourself, where did this money come from? Can I document that source clearly? How will this deposit affect my current resource levels if I receive SSI? Do not deposit money impulsively. Have a plan first. Know your resource limits. If you receive SSI, you must know, without any doubt, what your current countable resource limit is. As of 2026, the limit is $2,000 for an individual and $3,000 for a couple. If you are near that limit and you receive a large sum of money, depositing it could immediately make you ineligible. Talk to a benefits counselor before you deposit. Many areas have free benefits counseling services, specifically for SSI and SSDI recipients. A counselor can help you understand your options and how to handle a sudden influx of money without losing your benefits. Document everything. If you receive money as a gift, get it in writing. Keep records of where the money came from. Save bank statements, letters, legal documents, and any other paperwork that shows the source of the funds. If you ever face a review, this documentation could be the difference between keeping your benefits and losing them. Understand what is excluded from SSI resources. Not all money counts toward your SSI resource limit. There are certain exclusions that many people do not know about. For example, your primary home does not count as a resource if you live in it. One vehicle typically does not count. Burial funds up to a certain amount may be excluded, and money received from the sale of your home may be excluded temporarily if you use it to buy another home within 3 months. There are also special accounts called ABLE accounts, Achieving a Better Life Experience accounts, that allow disabled individuals to save money above the SSI resource limit without losing eligibility. If you are not already using an ABLE account, talk to a benefits counselor about whether you qualify. Do not structure your deposits. Or, we said this earlier, but it bears repeating because it is critically important. If you have a large amount of cash that you need to deposit, do not break it up into smaller deposits to avoid the $10,000 reporting threshold. This is called structuring, and it is illegal regardless of whether the underlying money is perfectly legitimate. If you need to deposit a large amount, deposit it all at once and be prepared to explain where it came from. Report changes to the SSA promptly. If your financial situation changes, if you receive an inheritance, a gift, a settlement, or any other large sum of money, you are generally required to report that change to the Social Security Administration within 10 days of the end of the month in which it occurred. Failure to report changes promptly is one of the most common reasons people end up with overpayment notices. Do not let that happen to you. Report the change even if you are not sure whether it affects your eligibility. It is always better to report and ask questions than to stay silent and face consequences later. Seek professional guidance. If you are facing a situation where you have received or are about to receive a large sum of money and you are concerned about how it will affect your benefits, please seek help. There are Social Security attorneys, benefits counselors, and legal aid organizations in most communities that can advise you. Do not try to figure this out alone. The rules are complicated, the stakes are high, and a mistake can cost you months or years of benefits. A few hours with the right professional can save you enormous grief. Watch out for scammers. Whenever there is news about IRS warnings and Social Security rules, scammers come out of the woodwork. They call seniors on the phone pretending to be IRS agents. They send official-looking emails claiming your benefits are at risk. They demand gift cards or wire transfers to protect your Social Security number. The IRS does not call you on the phone demanding immediate payment. The Social Security Administration does not threaten to arrest you if you do not call back immediately. If you receive a call or a message like that, hang up immediately. It is a scam. If you have any concerns about your actual benefits, call the official Social Security Administration number at 1-800-772-1213 or go directly to SA.gov. Always go to the official source. Let me ask you something honest. How many times have you found out about an important change to your benefits too late? How many times have you heard about a rule, a deadline, or a warning from a family member or a neighbor after it was already too late to do something about it? That is exactly what this channel is here to prevent. We watch the IRS. We monitor the Social Security Administration. We track legislative changes, policy updates, payment schedule changes, and benefit rule adjustments. And we bring all of it to you in plain English, in time for you to actually do something about it. You deserve to understand the system that controls your income. You deserve to know when rules change before those changes affect your monthly payment. You deserve clarity, not confusion. And that is what we provide here in every single week. So if you have not already subscribed to this channel, please do that right now. It takes 2 seconds and it could make a real difference in your financial security. Hit the subscribe button, turn on your notifications. That way, the next time there is an important update like this one, you will know about it immediately. And if you found this video helpful, if it gave you information you did not have before, please share it. Share it with a family member, share it with a neighbor, share it with anyone you know who receives Social Security, SSI, or SSDI, because the more people know about these rules, the safer everyone is. Leave a comment below and let us know. Did you know about the $10,000 deposit rule before watching this video? Have you or someone you know ever been affected by a bank report or an SSA review? We read every comment, and your experience might help someone else who is going through the same thing. This community is here for each other. That is what we do. Let us bring it all together, because I want to make sure you leave this video with total clarity. Here is what you need to remember. The IRS requires banks to report any cash deposit of $10,000 or more. This is called a currency transaction report, and your bank files it automatically without notifying you. In 2026, the federal government has enhanced its ability to cross-reference these reports with Social Security benefit records. That means a large deposit can now more quickly and easily trigger a review of your SSI or SSDI eligibility. For SSI recipients especially, a large deposit could push you over the $2,000 resource limit and temporarily suspend your payments, or worse, create an overpayment situation where the SSA demands money back. Breaking up deposits into smaller amounts to avoid reporting is illegal and can make the situation significantly worse. The solution is knowledge, documentation, and planning. Know your resource limits, document where your money comes from, report changes to the SSA promptly, use available resources like ABLE accounts and benefits counselors. And never try to navigate this system alone when free help is available. The rules around Social Security, SSI, and SSDI are complicated. They were not designed to be easy to understand, but you have the right to understand them. And now you have a little more of that understanding than you did before you watched this video. You work hard, you paid into this system, you depend on these benefits, and you deserve to keep every dollar that belongs to you. Stay informed, stay protected, and we will see you in the next update.